Good afternoon, everyone, and welcome to Stock Market Today for Tuesday, July 1st. It's Alissa Coram here, and we're officially in the second half of 2025, and not a great start for growth stocks, but we'll break down everything you need to know. Joining me now to do just that is my colleague, Justin Nielsen. Justin, what are we going to be chatting about today?
Well, certainly we're going to spend some time on the indexes and again, as you said, some of those hits to growth. But we can also take a look at some bright spots that we had in the market, including Wynn Resorts, WYNN, Brinker International, EAT, that's EAT, and also Bank of America, BAC.
Okay, we'll check out those stocks, but first let's take a closer look at those major indexes. So the Nasdaq, the loser of the day here, down 0.8%. It did manage to close off lows and hold above 20,000, so we will give it that, but breaking its 6-day win streak. Meanwhile, the S&P 500 finished down about 0.1%, off lows as well, so still right near those all-time highs that we've been hitting. Meanwhile, the Dow outperformed today, up 0.9%. So some strength there, and small caps also had a day of outperformance here, with the Russell up about 0.9% or so, headed into the final stretch of the day, finally getting above that 200-day line. But as growth investors here at Investors Business Daily, we focus on those leading stocks, and in a strong bull market that primarily are your growth names here. We definitely saw some underperformance today there, Justin.
Yeah, and just as a kind of a proof point there, if you take a look at FFTY, which is the Innovator IBD 50, that's a little bit more like what my portfolio looked like today. Being kind of in the growth names, I wasn't quite that bad, but yeah, I took about a 2% hit in a lot of my accounts because growth was definitely taking a harder hit than the indexes were even showing. At one point, I was baffled because I was looking at the advancers versus decliners, and even the way it closed on the New York Stock Exchange, according to Thinkorswim, we had about a 3-to-1 ratio of advancers over decliners on the New York Stock Exchange. And then for the NASDAQ, even it was about a 6-to-5 ratio in favor of the advancers. So not exactly what you would have thought, but look, as you said, when you have 6 days up in a row, there are those people that might say, well, gosh, what'd you expect? For it to go up every single day? And the
Right.
truth is, no one should ever expect that. I'm not going to go out there and say, oh, well, we should have known that this was going to be as bad as it was, because the fact is, while it was at stretched levels, one of the things we look at is an extension above the 50-day moving average line. And we were above 8% extended from the 50-day moving average line, which is on the higher side. This was as of yesterday.
Yeah.
That was on the higher side, where we typically do see some pullbacks around that area. But when you're just starting out into new high ground,
Hmm.
sometimes you don't want to be too hasty in getting that exposure down in protection mode, because you could just be so early in the rally. So again, it's easy to Monday quarterback and say, oh, well, yeah, of course you should have sold yesterday, but it's a little bit harder in practice. But RSP, let's take a look at that. This is the Invesco equal weighted S&P 500. Who would have thought that with,
Yeah, look at
again,
that.
growth getting hit as hard as it did, this was up 1.2%. An incredible move for the average stock on the S&P 500, since this is an equal weighted index. Even QQEW, which is the equal weighted of the NASDAQ 100. So still very tech heavy, and non-financials that are in the NASDAQ 100, those are taken out, but still flat for the day. So very, very mixed market. Growth taking the hit. Let's take one more look at FNGS, another ETF, to just kind of get our sense of what was happening. FNGS. So again, mega cap companies are filled here. 10 of your largest companies, the $1 trillion club, if you will, that was taking a harder hit than your average stock. So
Yeah.
again, this is what a lot of people were feeling. If you were in those heavy growth names, you were taken on the chin a little bit today.
Yeah. Okay, let's take a closer look at the Dow. What are you seeing here, Justin?
Yeah, well, I think David did a great job today when he was hosting IBD Live. He decided to just go through all of the Dow names, and you go one by one. And I mean, you look at some of them like UNH, for instance. So that was the top gainer today at 4.5% gain, but I don't want any part of this stock. This
Yeah,
this
really
doesn't
beaten
look
down.
great. So yeah, it's a little bit of a misnomer. I mean, Amgen was the second highest, another one that just doesn't look great, still below its 200-day moving average line. So
Mhm.
while the Dow Jones Industrial Average can kind of claim victory for the day over the Nasdaq and the S&P 500, I think it's a little bit of a Pyrrhic victory. I mean, you still
Yeah.
have a long way to go, folks.
Yeah. Okay. And the Russell 2000, the notable action here, as I mentioned, getting above that 200-day for the first time in quite a while, Justin.
Well, we did note that it did actually do it yesterday by a point. Well,
Okay.
you have to actually,
Barely.
yeah. If I'm not mistaken, it
I don't
was,
have to squint today to see it.
yeah. And this is, I looked at the Russell 2000 itself instead of IWM, so I
Yeah.
can't verify that on IWM, but the Russell 2000 itself, it was a point above 2174 versus 2175, the close. So yes, it stretched that gain above the 200-day moving average line, still testing it. So the question here is, can we stay above it? So in some ways,
Mhm.
you might say, well, gosh, advancers over decliners today. The RSP doing well, small caps participating. It's maybe a little bit of broadening out, but we certainly do prefer for our style of investing when growth is leading. And today was not that day.
Yeah.
But look, one day does not a trend make. So I'm not going to be panic selling, saying, oh, I've got to get rid of
Right.
everything and get the canned goods for the bunker.
Yes, we're going to take a look at some more ETFs here shortly. But on that note, let's talk just for a second about portfolio management because taking a step back, we are still in that power trend, which is a time where you want to let your winners run if possible, give them room to work. So, on a day like today, you mentioned you don't want to be panic selling, but what is the game plan? You're looking at your individual stocks, right? And then seeing are they holding above key support levels? What's your profit cushion looking like? And then make a decision from there based on does this action look normal? What are you thinking about, Justin, on a day like this?
Yeah. So the first thing you can do is make sure you're buying right. So like yesterday, when you're up 6 days in a row on the Nasdaq, you could be very tempted for the FOMO, the fear of missing out, to kick in, and maybe not being as disciplined with your buys, buying things extended. And that can be a recipe for disaster because when you buy things extended, then any little pullback, you're kind of taking water in your
Mhm.
boat, and it's not as easy to make progress when that's occurring. So it's buying right is so important because then you can kind of say, okay, is this acting in a way that's not normal because I'm losing money, or is this acting in a way that's normal? And if I had had that cushion, I would be
Mhm.
losing profits, but I wouldn't be losing capital.
Yeah.
And you might think, well, does it really matter? I mean, when you're losing money, you're losing money, but there is psychologically a difference, right? It's just like if you're sitting at a Vegas table and you're playing with house money, you can be sometimes a little bit more aggressive in the way you go when you're up for the year. There's all sorts of things that can go into that psychologically to press a little bit harder. But if you're just starting out with your positions, yesterday
Mhm.
was not a day to be really going heavy and increasing exposure in a big way. So
Yeah.
uh, again, as much as I'm not going to say, oh, you should have been doing selling if you had nice gains on things, you didn't want to necessarily be going overboard on your buying to catch up. So that's number one, buying right. Number two, the first thing I do is I take a look at my losses, the things that are down the most, the things that are losing support. Those are the first ones that are going out of my boat.
Yeah.
They're the dead weight, and I need to get rid of them so that my boat doesn't sink. So anything that I'm down on is going to be looked at
Mhm.
first, not necessarily tossed, but looked at first. And the things that I'm down the most on, I want to stop that bleeding. So I don't get myself in trouble. Beyond that, then it's really kind of looking and taking that step back. If you're a position trader, taking that step back, looking at the weekly charts, because
Yep.
sometimes if you're looking at the intraday charts, it can be really easy to panic. But you take that step back at the weekly chart, it kind of puts the perspective like, oh, this is kind of a blip in an overall move.
Yep.
And you'll find that, especially after a big rally in the market, when you do your post analysis, you'll sometimes find, well, gosh, why did I get scared at that moment when it
Mhm.
just looks like nothing?
Yeah. Some great reminders there, Justin. I thought that was a worthwhile tidbit
Detour.
to pause, yeah, detour to pause on today. So thank you for that. Let's check out a couple more ETFs as promised. RSPM. This is the eco weighted materials. Here's some outperformance.
Yeah, so I just wanted to kind of highlight, and we don't have to, spend a lot of time on these or belabor the point, but some of the areas that were very strong: RSPM, which, as you mentioned, is the equal weighted materials. XLB, which is the market cap weighted materials, was up there itself, so not like it was way off. But you also had the equal weighted staples, the equal weighted healthcare, that's RSPS and RSPH, along with their market cap weighted counterparts, XLV and XLP, that were also both up today in a nice way. So I mean, I'm talking about the leading ETFs, sector spider ETFs, that were up about 1.5%. So not just up a little bit; these were up materially. But I also wanted to add, because this one surprised me, consumer discretionary. Yes, XLY, which is the market cap weighted, very heavy in Amazon and Tesla, that was
Mhm.
up only 0.4%. But the equal weighted consumer discretionary I'm sorry, RSPD, that was up over 2.5%. So a very big difference when you take out those market cap weighted um, uh, leanings
Yeah.
for the index. And yeah, the consumer discretionary up a lot. And even, okay, Amazon and Tesla are the two biggest heavyweights there. If you take Tesla out, Amazon didn't actually look too bad today. Uh,
Right.
it was holding up there pretty nicely.
It sure was. And then one more, KBWB, circling back to
Yeah,
that.
since we are going to look at a bank stock, this is one that we've been looking at, as opposed to KBE, which is very very spread out amongst your banks. This one is a little bit more concentrated, and where it's concentrated is kind of where you want to be. And so we've been talking about this since that breakout above 67.61, and this one is continuing to move higher. And that one actually came from one of our YouTube comments from a good friend of ours, Tim Henkel.
Nice. All right. Shout out to Tim. Okay, moving on. Let's take a look at Wynn. This is WYNN, up 8.8%. And I don't think it was alone today, Justin. With this group theme was on the move today, I believe, on some Macau news.
Exactly. So, I mean, yeah, you look at LVS, which is Las Vegas Sands, probably more aptly named Macau Sands at this place, at this point, because
Right.
most of their revenue does come from Macau. You also had MGM, a whole host of the casino operators, and
Mhm.
as you said, yes, Macau was up quite a bit. And so, why did I choose Win? Well, this one has, whereas the others were kind of just crossing their 200-day moving average line, Win had already done it. It was kind of a little bit of the first mover advantage. So that's something that's interesting. Look, this still has a ways to go. There's a lot of overhead supply, but it's worth noting that some of that overhead supply is getting old. We do look at that black line that kind of identifies 6 quarters ago. When the overhead supply gets that old, you've got to figure, there's the old saying, you either wear them out or scare you out. And if you haven't been worn out or scared out by that point, you probably are more of a long term holder. And so maybe the overhead supply isn't as relevant, not irrelevant, just not
Yeah.
as relevant. And so
Right.
that does put Win in a potentially good position here. But again, as we usually say, look, just one day isn't enough. Can it hold these gains? An 8% gain today is great, but can it hold these gains? Some flat activity here wouldn't be bad.
Yeah. And it did cross that century mark today.
Yes.
So it's back above 100. Some spotty fundamentals here, Justin.
It would be a little bit of a probably a turnaround situation. I think that's what got
Mhm.
people excited was, okay, if the
Mhm.
Macau revenue is coming back in a strong way, does that speak for a turnaround, not
Right.
necessarily a continuation of growth?
Mhm. Makes sense. Okay, moving on. Let's check out EAT. This is Brinker International. It's been flirting with a cup with handle breakout, Justin, up 2% today.
Yeah. So, yeah, a lot of these stocks in the restaurant retail group, they had such a strong day on May 27th. I don't know, it was just a strong day for retail restaurant stocks that day.
Mhm.
You had Eat, you had Cake, you had Shake Shack, you had a whole host. Texas Roadhouse. Texas Roadhouse didn't end up doing anything, but you had stocks like Brinker, which is the parent company of Chili's. For those of you that like your baby back ribs, this has kind of gone sideways for a little bit. It's consolidated the gains. As you said, it's been flirting with this buy point. Did cross above it today. Now the question is, can it hold it? But yeah, some very strong fundamentals on this one in contrast to Wynn. I mean, this has had triple digit earnings growth, very solid revenue growth. And whereas usually we think of the expansion, really kind of helping a restaurant grow with numbers like this, there's something else going on here. So Chili's parent Brinker is certainly worth watching. And again, this is a nice cup with handle, finally breaking out. Now we just have to see if it can follow up
Mhm.
on the move.
Yeah, perhaps eating into some of the market share of your fast food restaurants as prices go up. Brinker positioning themselves in the value sort of category for what you're getting.
Yeah,
So,
absolutely. I mean, and hey, who doesn't like to sit down and actually be served? Or even just if you want to, pick up the food, it's
yeah,
still
the
pretty
takeout
fast in that
business.
regard too.
Exactly. No doubt. All right, and then last on our list, you said let's take a look at a bank stock breaking out. Here's Bank of America up 1.8% on the day, Justin.
And I think arguably a lot of these stocks have already come out. So
Yeah.
yes, you are getting a breakout, but here's where you have to sometimes be careful because really that 45 level was where you could have been entering into a lot of these financial
Mhm.
stocks as they kind of broke out at that level. And you already pointed that out on KBWB, where there was an earlier area here. So even though this is getting to new highs and technically a pivot, you just have to be careful when you get to these extended levels. And this kind of gets back to our point of buying right.
Mhm.
Now, look, there's no problem with buying at this point, but you just have to keep that in mind that the potential for a pullback that is very normal could shake you out if you're putting a
Mhm.
stop at a reasonable level. So just know that going in and have your plan ahead of time so that you don't start, saying, oh, well, because this is very easy to do. Oh, well, maybe I shouldn't have bought at that level. The stock isn't really doing anything wrong. I'll just hold for a little bit longer. And then, before you know it, you're turning a small loss into a
Yeah.
potentially larger loss that's a lot harder to recover from. The math just
Mhm.
really starts working against you when you let those losses get too big. 8%, it's not a problem. 8.7% to get back to even, but you start getting down 25%, and
Mhm.
it's like a little bit tougher. You got 33% to get back to even. And if you're letting something go down half, 50% from your entry price, you've got to get a full 100%, a double in order to just get back to even. So you don't want to put yourself in that position of having to dig yourself out of a hole.
Exactly. And sometimes with a stock, once it gets to that breakout area, it can look extended, which is why we do like looking at these earlier or alternate entries within the base where we can, where the stock is closer to its moving averages versus waiting for the breakout. Maybe you're adding on
Yeah,
the breakout, but it does change that risk calculus a bit. Like you said, if you are buying a breakout, when a stock is starting to get extended from those moving averages. So you just got to keep that in mind.
absolutely.
All right. Well, Justin, always a pleasure. And in case you want more, Justin, you've got him coming up today at 5 p.m. Eastern. Tell us more, Justin.
Yeah, so we're going to have normally we have on the second Tuesday our swing trader status update, but because of vacations and also we have a leaderboard scorecard next week, we had to kind of shift things around a little bit. So instead of the STSU, it's the first Tuesday swing trader status update. So we're going to have that. Mike Webster's going to join me, and as Ali said, if you want more Justin, great, but if you want less Justin, hey, it'll be archived so you can watch it later if you've had your fill of me today.
Yes, we love how we've got all these live streams, but folks can watch them on demand as well. So, looking forward to seeing you and Webby live today, 5 p.m. Eastern on our YouTube channel. And then, if you want to watch the recording, not only can you view that on YouTube, but also at investors.com/videos whenever you want to do some more research and get caught up on the latest with all things swing trader. Thanks,
Absolutely.
Justin.
Thank you.
And thanks everyone for tuning in. That is it from us for today, but we'll be back with more tomorrow morning on IBD Live, investors.com/IBD Live for all the details on that. We'll see you there. We'll also see you back here tomorrow after the close, everyone. Have a great evening.